So, in this video, we're going to talk about what could be the best investment of 2021. We're going to discuss how money is about to change forever, and this will be the biggest change since 1944. And we're going to share the best way for investors, people like you and me, to be investing our money in the challenging times that we live in today. Now, how are we going to cover all of these topics? Well, I've recently been given the unique opportunity to speak to Simon Dixon. For the past 20 years, he's been a professional investor. He's the CEO of the very successful company Bank to the Future, and he's honestly one of the smartest people I've had the pleasure of talking to on this channel. So I'm really excited to share this with you, as I just know you're going to absolutely love it. Because if you've ever learned anything from me at all, you're about to learn a whole lot more from Simon in this video. Now quickly, before we jump in, I just want to let you know that Simon has recently created a 100% free 4-part video series where he will be breaking down exactly how he thinks investors like us should be investing our money in this market. He'll be talking about which investments are going to perform well in the next year and so much more. Now, there is a link in the description and the pinned comment below, and I definitely recommend that you check it out, as it's not often that we get to see something so high quality from someone like this for absolutely free. Now, at the end of the series, there is an option to sign up for a paid service if you choose. But what I really like about this is that the 4-part video series is absolutely free and there's no hard sell on the paid option. So if you choose to sign up, like I have myself, I just think it's a great opportunity for us to learn the exact steps that we should be taking in this market today. Now, with all of that said, let's begin and let's talk about the biggest change to money since the dollar became the world's main currency all the way back in 1944. This is big news and it's coming soon. So let's talk about it. Simon, hey, thanks for joining me today.
Good to be back. I'm glad to be back since the last interview.
Yeah, no, honestly, it's my pleasure because you came on before. I was blown away. You shared so much knowledge with myself and everyone watching this. So I'm just delighted to have you on again. And I want to jump in with the first question. We're going to talk in this video about how to invest really in an optimal way so people can get a perspective on that. And I'll be picking your brains. But first, I think it would be great to really explain the backdrop. So let's start by talking about the fact that the biggest change to money in nearly 80 years essentially is on the horizon, because arguably the last overhaul of money and how it works changed in 1944 with the Bretton Woods system. And the IMF has come out recently and said there's a new Bretton Woods moment. So it's really not even speculation at this point. It's coming and it's huge. Could you break down for us what this is all about?
Yeah, absolutely. So, my lifetime obsession, having spent 20 years obsessing over this subject, has been down the rabbit hole of money. Now, that took me down the rabbit hole of Bitcoin. But before I was down the rabbit hole of Bitcoin, I was down the rabbit hole of money. And actually, the rabbit hole, Bitcoin, most people, they say once they go down that rabbit hole, they never come out. But Bitcoin is actually just a subset of the history of money. And it's a really elegant solution to many of the monetary problems that I've been looking at for most of my adult lifetime. And so in a nutshell, elections, wars have been fought over who actually and how money should be created. And economics was a science, I suppose started as an art, started as a philosophy, and then moved into a science around monetary policy that has still never been solved today. And so, it really goes back approximately 5,000 years when gold became the chosen form of money. And for thousands of millennials and centuries and decades, wars have been fought over how this should be done. It was only 1944 was the first movement towards an experiment with using one particular currency backed by gold, which was the dollar, to actually back most currencies in the world, so that it was exchangeable between dollars. And then in 1971, the gold reserve, which at that point it was 40% gold reserve, was completely removed. And we moved to this phrase that us as Bitcoiners use today very frequently, and in economics is discussed, which is fiat money, which is money that's completely, at this stage, backed by debt and has no connection to hard or sound money. And so really, in the context of the entire history of money, It's only since 1971, and every single fiat currency in history has failed. We have yet to see a fiat currency succeed. And the dollar is the longest, the currency that lasted the longest as a reserve was the Great British Pound. And more recently, before that, it was a Dutch currency, and now more recently, we're moving to the dollar. Yeah, so now we found ourselves as a result of this pandemic in the end of what many call, and I call the end of a debt cycle, which is where the government, corporations, and individuals are far too over leveraged. And the only way to actually to get out of these scenario is through innovative monetary policy, which is quantitative easing. The challenge with quantitative easing is it pushes up asset prices because the funds are used for asset prices, which drives greater levels of inequality. And so now you find yourself today in record levels of social unrest, and the rich getting richer and the poor getting poorer. And so now we have this interesting scenario where Bitcoin has come along and added to the new monetary story. And it wasn't necessarily from the banking industry. So you've had these hardcore team of developers, cypherpunks, activists, and just everyday people that have joined it over a 10-year decade period. And really, it's only now that the banks and everybody are coming in. So the latest part of this story is that the individual people beat Wall Street to this thing. And now you have these competing monetary policies, which are absolute polar opposites of each other. And I believe that with the IMF, these global, you add to these global organizations that are not necessarily connected to one country, they were responsible for they were founded out of the last monetary renegotiation, the Bretton Woods meeting in 1944. And I think over the next 5 years, we're going to have the IMF has called for Bretton Woods 2. And we're going to have a complete redesign of the monetary system, which means that investors need to be prepared for very political, unpredictable outcomes that's going to affect every single asset class that they're investing in today.
Yeah, so what I find fascinating about this is when I first started sort of researching all the things that you're talking about, it can sound slightly dystopian. And the truth is, though, there's so much evidence to this. Like Ray Dalio, for example, is someone who's always talking about the changing world order, which we're kind of on the precipice of. He highlights the debt cycles that tend to play out every 75 years, roughly. And it's been around that length of time yet again. And you see all these factors beginning to really look like they're seriously falling one after the other. Like even the IMF coming out and saying a new Bretton Woods moment. It was kind of like confirmation. There's no question this is happening. Even though all the signs have been there, when the people who are actually in control are saying, yep, it's happening, it creates challenges, I would say, for a lot of investors on how to view things. Because like the traditional way of investing, you had the classic 60-40 portfolio, where you buy 60% stocks, 40% bonds. And for many, many years that worked. You weather the storms and the bad times, but in the good times, you had the stocks which would drag your portfolio up. Today, we are in quite a unique situation, which is why I'm always talking more and more about diversifying, because I just think that it's so difficult. Even though diversifying has always been important, we are in quite a unique situation where if you're, say, just in stocks, I mean, every metric you can look at, the stock market looks quite overvalued. At the same time, though, if money is continually pumped out of the Fed and is used to support the market, you could argue maybe it could continue climbing even though fundamentals don't support it. It's not a simple way of investing at the moment. So I am always pushing diversification because I don't think it's easy to say this is going to happen or this is going to happen. I think there's lots of possibilities. What do you think for investors out there? How can they really build a portfolio so that if markets continue rising, they can take advantage? But at the same time, if things don't pan out so well and some of these things do come to fruition, they can protect themselves at the same time.
Yeah, so the first thing to be aware of is today is either going to be the greatest time for you for increasing your wealth, or it's going to be the worst time for you. And you will have to be on one side or the other. And so the importance of really thinking about these things as wealth gets made or destroyed, as inequality grows wider, you need to make a conscious effort to decide which side you're going to be on. And then that leads to the complexities of how. And so in an environment where politicians, we had a movement towards, over the last decade, the movement was towards away from communist countries becoming more capitalist. And now we're moving towards more capitalist countries becoming more socialist. And so as you move towards closer and closer to communist style ways of organizing economy, you grow a much greater dependency upon the whims of politicians and governments. And so in an environment where politicians and governments are dictating the future of markets, either through intervention in monetary policy through central banks, or reliance upon fiscal stimulus and debt policies and debt jubilees, or reliance upon helicopter money, as we've seen all these extreme measures, you start to have to prepare more and more for anything happening. And so when I think of my portfolio, I think of it as an investment in the status quo continuing. And I call that my dollar portfolio and dollar-based assets. And with my dollar portfolio and dollar-based assets, it's a bet on the government finding a way of financially engineering the economy to continue this debt cycle for many decades into the future, and the US still being at the base of the entire monetary system. And so in order to do that, you have to think about the different outcomes. And you mentioned Ray Dalio earlier. That's really the Ray Dalio investment philosophy, which is be prepared. There's different outcomes a market can give you, and you need to be diversified and prepared for all. So that's a traditional US dollar portfolio. There's different outcomes. You could have inflation, you can have deflation, you can have rising economic growth, or you can have a recession stroke depression. You need to be ready for all four. And you can diversify. There's different products that benefit from all those different scenarios. The second thing that I prepare for is a shift in terms of the dollar no longer being at the base of our monetary system. And in a time when you don't really know what's coming next, i.e. Bretton Woods 2, then gold is the 5,000 years monetary history that the world has been able to rely upon for preserving your wealth through every time of extreme measure, whether it be war, whether it be the collapse of the banking system. Gold has survived it all, and you've preserved your purchasing power. The third outcome is to significantly enhance your portfolio by taking higher risk in a more extreme outcome. And this is what I call my Bitcoin portfolio. I call it retirement plan B. And the Bitcoin portfolio survives any kind of scenario. So let's say you enter into a lockdown and your gold is stored in custody, and everyone stores it in Switzerland and Singapore mainly. And you can no longer access your gold that you thought you had to hold in custody because you couldn't store it at home, like most people can't, because gold is very hard to store. Well, Bitcoin is very easy to store, and there's you can have it close to you. And in many of these outcomes, Bitcoin has a counter proposal and structure that would thrive in many of the things that are bad for the dollar, or may even be bad for gold as well. And so I think of it in those three different ways. And over the years, my Bitcoin-centered portfolio has dwarfed everything else. And so as you become wealthier and wealthier, so over, since I've been involved in Bitcoin, which was 10 of the last decade, I've seen more and more people get wealthy through their Bitcoin side. And so as the Bitcoin position dwarfs all the other portfolios, you can rebalance and move more over to your gold portfolio or your dollar portfolio, but still the Bitcoin portfolio can still be a significant amount of it. And so what I've seen over the years is most people don't apply, traditional diversification and portfolio to, because they get addicted to their belief that something could happen. And you see this a lot with gold investors. They believe, oh, I won't touch Bitcoin because the internet could go down. Or Bitcoin investors say, I won't touch gold because Bitcoin kicks out of gold all the time. Or traditional investors saying, I won't bet against the Federal Reserve or the doomsday, and Bitcoin and gold doesn't pay any yield. So the way that I approach that is actually, there's a lot to learn from all those different scenarios. And I try and borrow a little bit from each of them and be ready for lots of different scenarios.
I think we think very similarly in that sense as well. It's like essentially it's diversifying, right? It's like looking at it and going, these possible things could happen. I kind of think this one, like we all kind of have a thought on what could happen, and we but it's not lending too much to the concept that we are right. Like it's looking at it and going, even though I think something, like anyone, I could be wrong. So planning for more than one situation is, I mean, to some extent, is common sense, but I feel like it's something that's constantly overlooked. Maybe more less so with institutional investors, but everyday investors, I would say, just diversifying and not going too heavy in on one thing, and that applies to both sides. Like buying too much Bitcoin and going 100% in is incredible risk. Having none at all is probably is quite a significant risk as well. And I know that sounds counterintuitive because it's one of the most risky assets there is, but it's also the highest performing 10 of the last 12 years. So there's like an opportunity cost where buying it is risky, not buying it is having none of it. You have the opportunity cost risk. There's an argument I would personally make that having a small proportion, at least, is probably the least risky outcome because you don't have none, but you're not overly invested. But at the same time, I think some people may be looking at Bitcoin today and maybe saying that we're not as early, well, not as early as we once were, of course, but not that early anymore because you've got two public US companies, Square and MicroStrategy, who have bought it this year. You've got PayPal adopting Bitcoin. You've got famous investors like Paul Tudor Jones and Stanley Druckenmiller talking so positively about it. Now, I really don't think that anyone at this point is late to it, and I think we're still very early. But I also think it's a good idea to sort of challenge what you think yourself. And even if you have thoughts, to ask the question, am I wrong? So it's not that I really think this, but what would you say to the audience to counter these points? What makes you think that investors are still early to things like Bitcoin and cryptocurrency?
Oh, I know investors are still early into Bitcoin because if you speak to the average person in the street at the moment, I'm in my house right now and I'm getting some work done. And if I speak to my electrician about Bitcoin, their first perception of it is, oh, that's that thing, that's that get rich quick scheme. Or they might say, isn't that currency for drug dealers? Or they might say, oh, well, my friend or my auntie told me that was a Ponzi scheme. Or they might say, yeah, I heard it was this scam, something to do with OneCoin or something like that. And you know, the day that nobody says that anymore, or you don't get many comments like that, then you might be at the stage where Bitcoin is a store of value. At the moment, it's a speculative store of value because I am certain, from my personal beliefs, I do accept that things can go wrong, and there are things I've been certain about that the world has proven me otherwise. But I'm certain that Bitcoin plays a role in the future of owning your own money, being able to spend your own money, and having a money supply that you can rely on, and it becoming incredibly rare digital scarcity. Yeah, I'm very confident in that scenario, having been involved with it for the last 10 years and see every year it gets stronger and stronger in terms of its security, its attack vectors. But the day that so it's what I call a speculative store of value. The reason that there's so much more money is because you can speculate on whether it will become a store of value. And that's a once, I don't want to sound like someone pushing something, but you don't get many of those in your lifetime. I think, when I was at school, we were doing pen and paper in school. And then when I was at university, we were doing it on computers. And then when I started business, we did everything online. And I got to see that shift. That was one shift that I experienced. And then having been involved in money, I don't think you're going to get another thing like Bitcoin. I don't think we're going to see that again in my lifetime. And so for me, these two shifts that I lived through, the internet and the internet of money, were two things that you don't get many things like that. So it's a very interesting scenario. And, I had Jim Rogers on my YouTube channel, and he says, be very careful when you say things like, this time is different. Which is true. Very wise advice. People, even in money, this everything that's happening right now, we say it's unprecedented, but you can look back in history and find parallels in history. And the more I look back in monetary history, the more I see we have been through situations. So you began this interview by talking about these things that sound so extreme. Well, they're less extreme when you read the history books because they've all happened before in different flavors. And so I think that's a good thing. I think as humans, we only know what we've lived through. And then we feel we can study history and it helps us understand likelihood more. But once you experience something, it becomes cognitive. It lives within you. And so the problem is that these big shifts are multi-generational. So we never get to experience it and we forget all the history. But we are alive at what I consider to be one of the most interesting and most rapidly changing times in financial history.
It's so true what you say there. Like, it's the recency bias, as in what has happened in our lifetimes, we assume is going to continue forwards. But it's why I follow people like yourself and people like Ray Dalio, because you go back into history and you actually see so much more than happened in your lifetime. And these crazy events where you think, oh, that's never going to happen. It has happened and it goes through cycles. So if anything, it's more crazy to actually say, we will never have another cycle again. Like, when you actually zoom out, the most logical thing is what has happened throughout history is going to continue repeating. Just because you haven't seen it doesn't mean it won't happen. And that's why, yeah, for me, I'm very interested by Bitcoin, and I've been working in the industry for like nearly 4 years now. And I just think there's so many interesting innovations happening here. But as I mentioned before, I try where I can to challenge my own thoughts. So as someone who's worked in this industry for like nearly 4 years now, I've seen all of the criticism there is about Bitcoin and cryptocurrency. And I think I've seen enough explanations to kind of say, okay, some are somewhat valid, but I think there's good explanations for why the things that people describe are not going to play out in that way. Like, it's not like, okay, so for example, I'm just going to throw a couple at you and say what you would say to this. For example, Bitcoin can't be a store of value as it's too volatile. And if Bitcoin ever does become like this global decentralized currency, then governments are just going to ban it. And that's the end of it. What would you say to those 2 points?
So two different criticisms. The first is volatility. Well, volatility depends upon the base asset that you think in. So if you think in dollars, then everything's pretty volatile. There's actually a lot of stocks that are way more volatile than Bitcoin. I used to work as a market maker on the London Stock Exchange, and we had significantly more volatile assets. What I think they mean is that they're saying, because what I purchase things in is priced in a different currency to what I might be saving in, then I can't use it as a medium of exchange. And a medium of exchange just means if I want to go to a shop and it costs me $3 to buy a bunch of milk, and I earn Bitcoin, and by the time I get to the cashier, my Bitcoin is worth $2.50 rather than $3.50, then it's very hard for me to organize my life around such a thing. Absolutely true. It's why Bitcoin hasn't succeeded at becoming a medium of exchange for everybody, because the only way that something becomes a medium of exchange for everybody is when it's priced in the same thing that you earn in. So the barriers to Bitcoin, you going and getting your pint of milk and it being 0.013627854 Bitcoin. I've been involved in Bitcoin for a decade now, and I still couldn't tell you how many dollars that is. I couldn't even conceptualize what that would buy you in terms of Bitcoin, because our human brain can only seem to work past 2 decimal places. So then you have to start thinking, well, when is volatile good and when is volatility good and when is it bad? Well, it's good for traders. That's why so many traders play around with Bitcoin. They like things that move fast so that they can make more money off the movements, up or down. Or it's good for you if you think it's actually going to go up over time due to a law called Gresham's law, which is why it can be a store of value. Because Gresham's law states that when you have 2 forms of money, bad money and good money, you tend to try and spend bad money as fast as possible, which is why governments love fiat money, because fiat money has what in economics we call high velocity. It means that it circulates many times over. You put it in one bank, you spend it through a card, and it circulates around many, many people, because people don't tend to hold fiat currency. I know people living month to month or a year, they tend to hold fiat currency and nothing else. But people that have accumulated assets, they don't keep their assets in fiat currency because they know that it will just be depleted in value over time. So cash is very good for spending, but very bad for saving. And so volatility is something you would actually want if you've got a longer time frame, and you believe something's going to go up in value. So that's why it could be a store of value. It probably won't be a medium of exchange until some of that store of value properties actually disappear. It's why gold is not used as a medium of exchange today. The second one is, will governments make it illegal? Can they make it illegal? Yes. Will some make it illegal? Yes. Will all of them make it illegal in a coordinated effort? Well, that would be an interesting conversation. And my belief is that game theory and currency wars would prevent that from happening. So while those that have the most to lose, so we talked about Bretton Woods 2. The original goal of Bretton Woods 2 was where John Maynard Keynes was proposing a global currency called the Bancor. And in the end, the US managed to get the dollar back by 40% gold. And then there's all sorts of distortions where people renege on certain agreements. So in 1971, the US reneged on the gold, the agreement in 1944 in the Nixon shock and said, we're no longer going to back it for gold. This is no longer convertible. And so during that time, and then in the last Great Depression, the US, Roosevelt said, gold ownership is illegal. All Americans, you have to hand it in and we'll give you some Federal Reserve notes in exchange. And what happened is it created a ginormous opportunity in the international markets, different countries, to actually make these markets, make arbitrage opportunities, and efficient markets where they weren't interfering became the markets that sucked up all the industry. And another opportunity comes along. So let's say that America right now says, we're the US dollar. We want to remain the most important and most powerful and most... the reserve currency of the world. We see Bitcoin as something we don't want to do. Well, firstly, it would be an admission that they are moving towards more of a communist style ideology. But these things can happen. And another country would come along and say, well, we think that the dollar in the US is in a ginormous debt cycle. It's had its time. We're going to actually support Bitcoin. And as a country, we're going to accumulate a big block trade. We're going to allocate some of our country's electricity towards mining Bitcoin. And then we're going to announce that we're using it as a world reserve currency or as a reserve currency for our country. And then you have a few central banks that the price would probably increase a lot. And you have an asymmetric bet opportunity for countries. Now, countries that have destroyed their currencies, or for whatever reason are politically sanctioned from certain countries, start to see an opportunity. And it's just like Bitcoin. Bitcoin was David beats Goliath. Bitcoin should never have succeeded. It was a bunch of us in a room that found this technology, and we're trying to figure out how we could, do something to beat the banks. And so a bunch of startups came along and tried to create as many services as possible. And then each year, more and more people wanted to own their own money, spend their own money, and benefit from a fixed supply. But it should never have succeeded, but it did. And I would say at this stage, it has succeeded, and each year it just gets bigger and bigger and better. But that opportunity for the individual that actually invested in Bitcoin to actually combat the wealth inequality. When I first got into Bitcoin, I was £100,000 in debt trying to build a business. And I'm not trying to brag, but now I've got everything I would want financially. I achieved all my financial goals, and I've got Bitcoin to thank for that. And I think that now businesses are coming along and saying, I'll do that. Well, we want some of our dollars. So public companies are now applying, saying we want to hold a percentage of our reserves in Bitcoin. And I think countries are doing the same. And I think central banks will do the same. And I think certain countries are preparing for that scenario. Japan, because they had the first, fraudulent exchange, Mt. Gox, that went bust by adopting principles of banking and and those were illegal for Bitcoin exchanges, but legal for banks. Because Mt. Gox followed the policy of fractional reserve banking, but for Bitcoin, they actually, Japan put together lots and lots of regulations and started looking at this ahead of the curve. And the small countries are saying, well, we want to regulate exchanges. We want to put together policies for this. And that's what many countries have been doing. And if one country makes it illegal, then that's our gain. So we saw this in Asia, where China said, we're going to ban exchanges. And all the data went to Korea and Singapore and Japan. And they put together regulatory structures in order to embrace it. So one country's opportunity in game theory states that you could end up in a ginormous countrywide FOMO, and it could end up being actually the big currency war. The David can beat Goliath, and we have a shift in superpowers. And when we have these real shifts in currency power, I think Bitcoin is going to be a tool that will be used by some.
Yeah, I actually see something very similar. And like it kind of all goes back to the idea of you don't necessarily want to be first, but then you don't want to be last either. Like we're seeing this with companies and investors at the moment. Each time there's a new announcement, it feels like there's a snowball effect. Like it took a while before you see a serious institution like publicly say we've bought it. But then the second name comes quite soon after, and then you're probably going to see more and more names. The same way with like PayPal getting involved. If you're another bank, at a certain point, PayPal are going to make a lot of revenue from that. So you have two options. You either hope that they stop making money from it, or you're kind of incentivized to do the same thing, to compete with PayPal. It's like any technological adoption. You can just pretend it's not happening and try and ignore it and say, let's just sweep this under the carpet. Or eventually, you have the choice of you either lose or you get involved with it. So what's really fascinating about this, and one thing I wanted to talk with you today, you've put together a 4-part video series and a course, and I want to give you the opportunity to talk about it. And one thing I want to say before you do is I really love the fact that you basically made a 4-part video series, which is free for anyone to consume. And then there's like a course people can do if they wish after that. But the 4-part video series is free for everyone. So it's just like an incredible opportunity to learn from someone who has been in Bitcoin longer than anyone I've ever spoken to and has incredible knowledge. And you just built this for anyone to watch for free. So do you want to, I'll hand it over to you so you can talk about it.
Yeah, so for the last decade or so, since I founded banktothefuture.com, I've been only able to work with a certain subset of investors, high net worth investors, and having done funding rounds for over 100 companies and now built a community of 100,000 high net worth investors, I've learned and got a very inside perspective of the investors that were involved in the highest performing asset class for 10 of the last 12 years. Some of them didn't make money. Others made a lot of money. And so it really dawned upon me that it's not necessarily, so many people came to me and said, well, Simon, you were there from the beginning. But it reminded me that I know people that were there from the beginning but still didn't make it. And the reason for that is some of the things we talked about in this, which is poor money management. I'm not understanding whether you use Bitcoin as a unit of account, median of exchange, or store of value, and just not, putting all their money into the next big shiny object, the next big Bitcoin killer, putting all their money into scams, all sorts of things. And so I wanted to do something, and it was challenged to me on my YouTube channel. They said I got a question earlier this year as the pandemic started to get really out there. And I said, well, actually, the tools today are better than they ever were back then. It was really, really hard back then. But today, there's actually an amazing, it's amazingly easy to get in compared to what it used to be. And so I said, well, actually, if I were to start again from scratch today, I want to create a video series of exactly what I would do, pretending that I have no savings. So I said, well, firstly, for those that have savings, I'm going to take $1 million of my personal savings and go through exactly what I would do, the tax efficiency, how to structure it, the diversification mix, what things I'd be preparing for, how I'd combat inflation, deflation, growth, all these different things we talked about today. And I wanted to create a free video series that anyone could consume. And that actually comes out at retirementplanb.com. So that's the free video series.
Can I
And
just,
I'm going to do two
Simon, can I
things.
just jump in for a second? I just want to clarify for everyone. You talk about investing a million of your money, but I also just want to make sure everyone knows that basically the same principles that you apply work for any value of money. So if someone out there has $1,000, for example, you can still apply the same rules, right?
Yeah, I mean that brings me into my next thing. Then people were like, "Well, I don't have $1 million. All right for you, but what would I do?" And yeah, everything I'll be doing applies to if I had $100, $10, $1,000, $10 million, $100 million, all the same. And the second thing I wanted to do is actually do it with no savings. And so if I had no savings but a regular income, how would I do it as well? And so, wanted to create something that's valuable to as many people as possible. And then, yeah, if anyone wants to actually do it with me, then there's an option where we can implement it over 7 weeks, and that would obviously be a charge for service as well, because it's got a scale, and I've got to be able to do it with a group of people at the same time. But the free video series is, we spent a lot of time, and it's exactly what we would do today in the current environment, preparing for what might come next, and lots of different scenarios.
Yeah, and I'd recommend everyone just go check it out because even if you can't afford the course that goes alongside it, it's incredible education for free. So there really is no downside. All right, Simon, I think we've picked your brains quite a lot today, and I really appreciate again you coming on and just sharing so much knowledge, teaching me so many new things, and hopefully educating the audience as well. Really appreciate it.
Okay, thanks for having me. And yeah, I really appreciate the education that you're giving to people as well.